What separates an average trader from a profitable trader? In this video, I hope that you guys can take away some key notes that you guys can use in your own trading plan to not only help you become more consistent, but a lot more profitable, especially going into 2024. I've been trading full time for around 6.5 going on 7 years come 2024. I've been trading in total around 8.5 years going on 9. One thing that I do kind of want to emphasize, and one thing that will never change, is market cycles, the news, environment, losing trades, emotions. All of this stuff is never going to change. You personally are never going to fully master this industry. You're never going to fully master being profitable. You're never going to avoid taking losses. You're never going to avoid having those down days or those cold streaks. So one thing that you need to understand is that you're going to have to live with this as long as you want to be in this industry. I believe that this is one of the best industries that you can be a part of, just due to the fact that you can do it from anywhere. You can do it when you want. You don't have a boss. However, there comes with all of those things, there comes a big downside. Because you're not being held accountable, you can go off path. Because you are not being held accountable, you can tend to do things like the average trader and not do things like a profitable one. Because you are not, no one is sitting over your shoulder enforcing what you're doing on a day in and day out basis, you can tend to go off track. Okay, so an average trader will take a trade right off the open. They'll take a trade during lunch hours. They'll take a trade during FOMC. They will take a trade, going into the close. They'll take trades for the sake of taking trades. New high of day, new low of day, pre-market highs, pre-market lows. This indicator, that indicator, all because they don't fully understand their own trading plan and they don't have a clear direction or objective of what they're trying to do. They're out there hunting trades. So an average trader is going to be hunting like a scavenger. You're searching for the next best opportunity. A profitable trader allows trades to come to them. Okay. There may be portions in the day where you're sitting on your hands for 2 or 3 hours in a row before that trade setup comes to you. You might have a day, 2 days before the setup presents itself and you're able to take a trade. So one of the things that I'm going to kind of inform you guys to write down, as simple as it is, but write it down because I need you guys to go over this on a day in and day out basis, is when to take a trade. What time do you need to take a trade, right? So the first thing that we're going to write down here is when to trade. Okay, and when to trade means a lot of things. Does your strategy present itself in the first hour? Does it normally present itself off the open? Does it normally present itself based around momentum in news? Does it present itself when the market is trending and not ranging? So, for example, I have a strategy that works great when the market is trending. When the market goes into consolidation, it goes into distribution, or the market range for the intraday gets very tight and it's kind of going up and then it's coming back down and then it's going down and it's coming back up. Those time of days, I have to be very, very good at identifying when that shift is happening, because I have to sit on my hands until I get my setup. So if you do not want to be an average trader, you need to first identify when is the best time for you based on your strategy that is going to present the best possible probabilities for you to take the trades. The next thing that I want you guys to focus on, okay, which is going to be number 2, is when to stop trading. Okay, so when to stop trading, as simple as this sounds, is very, very important. I've worked with traders for over 4 years and I've noticed a few different similarities in a lot of traders. A lot of traders will sit in front of the computer screen, they'll sit in front of the charts, and they'll just consistently and continuously take a trade after another trade after another trade. I'm not taking this trade, but I'm going to take this next trade. They get into what I call a cherry picking sort of trading environment. And that means that based on what they feel or what they think, or based on the previous trade that they took, is going to determine the next trade that they take. No two trades, even if using the same strategy, are going to have the same outcome. Okay, so I'm going to repeat that once more. No two trades, even if using the same entry model, the same strategy, the same indicator, are going to have the same result or outcome. So knowing when to stop trading is very, very important when it comes to your development, but not only your development, but also how long your longevity is going to be in this industry. Because if you don't understand that, let's use a very generic example. Let's say you take 3 trades within the first 2 hours of the market. 2 of those trades are winners. 1 of those trades is a loser. You're up a little bit from the 2 winning trades. You scratched out on 1 of the winning trades from the losing trade. Most average traders will then think that if I take another trade, if my strategy presents itself, I'm going to make back those losses and increase my P&L even more. And what tends to happen is, because trading is all based on probabilities, that next trade could in fact be a losing trade. And if it's a losing trade, tends to put a trader on tilt, tends to get a trader extremely emotional. So now, not only are they giving away all of their profits, but they have actually now gone into the red, gone into drawdown. So it forces them to sit longer on the charts and to continue to trade to try to make it back. This is a very, very big common issue that I see going on with a lot of traders. You have to understand what is a realistic number based on your position size, based on the amount of risk that you're risking per trade, based on the amount of take profit that you're taking profit on, is a realistic number to stop trading on the day, whether you are green or you are red. So for example, if you took 3 or 4 trades and you're up, let's say $170, and the market's really not presenting itself, or you're up $100, or you're up $500, but the market's really not presenting itself another opportunity, and you're kind of waiting for that next opportunity, what makes an average trader different from a profitable one is because a profitable trader will understand the probability. They will understand that there's a potential risk for loss versus looking at a potential risk for additional profits. And they will pull the plug and come back tomorrow with a clear mind and a clear set of charts. Versus the average trader will think to themselves that if they continue to sit and if they continue to find that one more trade, they can increase their P&L or break even or go back to, profitable if they are down. So that also goes to say the same on the losing aspect. Let's say, for example, you take 3 trades to start the morning. 2 of those trades were losers and 1 of those trades was a winner. The majority of the average traders out there will think that, well, I've already lost 2 trades. I just won my last trade. If I find one more trade, it might bring me back to the green. And if that trade doesn't work, all you're doing is dragging yourself into deeper drawdown. So you have to have something in your trading plan. You have to have something in, your set of rules that is going to make it a very concrete rule where you walk away. Where do you decide to walk away? What is the dollar amount? How many losing trades on the day is it? For everyone, it could be different. For myself personally, if I lose 3 trades in a day, I stop trading. So if I'm trading the NASDAQ futures and I take 3 losing trades, I hang it up, I come back tomorrow. If I'm trading options, I lose 2 trades, I will hang it up on the day. So I have different risk parameters for my futures trading, different risk parameters for my options trading. Being that I trade more heavy size on the option side, I will limit my losses on the day to 2 losing trades. So regardless if I win one, I lose 2, I stop. If I win one, I lose one, I take the next trade and it's a winner, I will still be able to be in the game. I will still take trades until 2 things happen. I am comfortable with the P&L on the screen to walk away and come tomorrow, or I take 2 losing trades and I live with those losses. The average trader is not ready to live with the loss. They are not ready to live with unplugging and coming back tomorrow because they're in fear of potentially missing a trade. Okay, so when to stop trading, when to trade, what's best for your strategy, what's best for your own personal time schedule. Some of us work 9 to 5. Some of us have personal family issues that we must attend to. So trading hours could be limited. You have to figure out when is the best time for you to have a clear head. When is the best time for you to sit and wait for your trade opportunity to arise. And also, when are you going to stop trading? What is that dollar amount? Is it 2 winning trades? Is it 3 winning trades? Is it a specific number on the winning side? Is it a specific losing number on the losing side, right? So again, as soon as you start to identify these things, you need to live and die and breathe by these rules. This is going to protect you. This is going to allow you to be profitable. The next thing is, do you take the setup when it presents itself every single time? As long as you're still permitted to trade, as long as you have not hit your daily loss limit, as long as your trading rules say it's okay to trade, if your strategy presents an entry, do you take the trade? A lot of traders will tend to cherry pick specific trades. I didn't want to take the trade because it was such a big push higher and I didn't think that it was going higher. That, my friends, is going to be the death of your trading career, just due to the fact that you are trying to predetermine the outcome. Remember, as a trader, we cannot predetermine the outcome of any one particular trade. We have a set of rules, we have a strategy, we have a stop loss, and we have a potential take profit. Once we enter the trade, our job is done until we take profit or until we get stopped out. There is no adjusting your stop. There is no let me hold for a little bit more. There is no let me increase my size on the next trade. Once you're in the trade, you are in the trade, okay? Again, the next thing that I really want you guys to focus on is accountability. Okay, so accountability is very, very big in trading, just due to the fact that as a trader, you're your own independent boss. Like I said, like I mentioned earlier, there's nobody looking over your shoulder. There's nobody that's going to fire you. There's nobody that's going to write you up. There's nobody that's going to come and slap you on the back of the hand and tell you don't do that. You are your own boss. You are your own worst critic. You are the risk manager. You're the accountability manager. You're the supervisor. You're the CEO. You're the CFO. You are everything when it comes to this business. If you do not have accountability for your mistakes, if you do not have accountability for your trading plan, if you do not have accountability for the number of trades that you're taking, if you don't have accountability for when you're trading, if you're just out here trading reckless, that's an average trader. Remember, the average trader fails. The average trader does not stay in this business longer than 2 years. The average trader continues to deposit money into the market. A profitable trader extracts money from the market. A profitable trader puts a certain dollar amount in and they manage that risk and they continue to grow that number. Now, again, there's waves okay, in this P&L. It's not all straight up. It's not all straight down. You have a little bit up, you have a little bit down, a little bit down, a little bit up. You sit at break even, you come back down, you sit at break even. But a profitable trader manages the risk, manages the money that's in there. So whether you're trading a personal account or you're trading for a prop firm, if you're trading for a prop firm, forget about what your drawdown is. If you're on a $50,000 account and you have a $3,000 drawdown or a $2,000 drawdown, forget about that number. That number means nothing. What you are managing is how much money you put into that evaluation challenge. How much did it cost to sign up? Did you put $100 in? Did you put $500 in? Did you put $20 in? How much was that one particular evaluation? That is the number that you're growing. That is the number that you started with. That is your risk. It's not the $2,000 drawdown limit before you get auto liquidated. It's not the $3,000 daily loss limit or weekly loss limit. It's how much money did it cost to actually start the evaluation. That is your potential risk. That's what you need to hold yourself accountable for. And that is what you need to strive to grow. So for someone, let's say, for example, I trade with TopStep. For a $50,000 account, it costs $49. I am managing $49 and I have leverage up to $50,000 and I have a maximum total drawdown of $2,000. So I'm going to manage the $2,000. However, if I lose the $2,000, I didn't realistically lose anything other than the $50 that I invested. So at the end of the day, why am I going to beat myself up so much for losing an account when it was only $50? Again, how much money do we want to put into this thing before we see some type of potential return? Now, again, if you started with a $50,000 account and you managed to get to the funded stage, right? I'm talking about people who are taking the prop firm route. If you managed to get to the funded stage and it costed you $50 to sign up for the account and you potentially make $500, $600, $700 on the month, many traders will look to think that that's a failure. Many traders will look to take more size and increase that number by double. Many traders will want to, maximize the profits at the end of the month to take a bigger payout and end up losing the account. You started with $50, $500 profit, even though it's a very small number, is fantastic returns for the investment that you put in. So again, remember these things. Do not be an average trader. If you want to be a profitable one, you need to figure out your strategy, your edge. When is the best time to trade? Okay. Also, when are you going to stop trading? Is it one loss? Is it two losses? Is it three losses? Is it two losses in a row? Is it a specific dollar amount? If it's going to be a specific dollar amount, make sure that dollar amount is relevant to your account size. If you're trading with $1,000 personal account, I'm not going to sit here and tell you that to trade up to losing $500 or $800 and then call it a day. It needs to be something around $50 or $100 on a $1,000 account. If you're trading for a prop firm and it's a $50,000 evaluation account or a $50,000 funded account, I would definitely recommend something between the lines of $100 to $250 a day. Somewhere in that vicinity needs to have a hard stop for you to stop trading, come back tomorrow. It's easy to make $100, $200, $250 and get it back versus it is to try to crawl back from being down $600, $800, or $1,000. I hope that makes sense. It should make perfect sense. And the last thing is that accountability. Are you holding yourself accountable? Are you doing what you need to do? Did you stop out yesterday when you were down 150, or did you overtrade and lose 500? That, my friends, is a reason why you're failing. That is a reason why you're an average trader still. That's a reason why you're not profitable yet. Are you holding yourself accountable? Are you taking the trade setup when it presents itself to you based on your strategy? Or are you cherry picking trades? Are you moving stop losses? Are you adjusting take profits middle of the trade? Remember, once you enter the trade, your job is finished until it hits your take profit and or stops you out. The only other thing you have to manage outside of that is when are you going to stop trading and when are you going to trade again. If you live by these three rules, when to trade, when to stop trading, and hold yourself accountable, you will go from an average trader to a very profitable trader in a matter of months, in a matter of less than a year. But the problem is that it takes severe discipline to do this. And until the discipline becomes a habit and becomes natural, it feels like something so unorthodox to you. It almost feels impossible to not take that trade. It almost feels impossible to just stop trading with $100. It almost feels impossible that you're going to make back that $500 loss if you just increase your size on the next trade. It almost feels impossible when it's not a habit. Make these things habits, stay disciplined, and you will go from an average trader to a profitable trader. I hope this video helps you guys. If you guys would like to trade with me each and every single day live, maybe you would like to build out a personalized trading plan, access to one-on-one coaching and mentorship, and able to trade live with the team each and every single day. I do intraday live technicals. I also do one-on-one phone calls, Zoom calls, live screen sharing webinars. If you guys would like an additional support system, an additional help from a community, from myself, access to my courses with all my strategies laid out, join Evolution Traders. I've got one spot left. That price is due to increase in 2024. I'll see all of you guys who decide to join on the inside. To everyone else, make sure to like, comment, and subscribe. To much success, happy trading, stay patient, guys. Remember these 3 rules and you're going to kill it.